Welcome to Goldstone Finvest. I am Prabhat Majumdar. I will share Thursday's market update. The future of trading is changing fast, but the point is, are investors also adapting to the change in the same way? The market is shifting the dimension from calling a broker to a more of automated systematic way of trading. Markets are nothing but a systematic transfer of money from an undisciplined trader to a disciplined trader. Warren Buffett said impatient to patient investors, but when it comes to trading, it is all about taking money from an undisciplined trader to a disciplined trader. The Nifty bounced back sharply from the previous day's sell-off and closed with a percent gains on April 1 on US President Joe Biden's $2.3 trillion spending plan, strong buying in metal stocks and a recovery in the banking sector. The Nifty rebounded sharply at the opening at 14,798 and erased some gains in the morning itself to hit the day's low of 14,692, but it did not break the previous day's closing. The index rebounded immediately and gradually extended gains to touch an intraday high of 14,883. Overall, it remained in the positive terrain for the entire session and closed at 14,867, up by almost 176 points. It formed a bullish candle which resembled the hanging man pattern on the daily charts, while on the weekly scale there was a small bullish candle formation. The Nifty gained 2.5% during the truncated week. The hanging man is a bearish reversal candlestick pattern that is usually formed at the end of an uptrend or at the top. In a perfect hanging man pattern, there is a small upper shadow or no upper shadow at all, a small body and a long lower shadow. As weekly and daily MACD along with other technical parameters are still in sell mode, traders should initiate long positions only if the Nifty sustains above 14,900 for at least 30 minutes and look for a modest target placed at around 15,120. The market remained shut on April 2 for Good Friday. The Nifty made a strong recovery from the intraday low of 14,692 and formed a hanging man pattern and a small bullish candle on weekly charts. As the trend seems to be sideways, this indecisive formation may not have the same pattern implication as it can be seen in a trending move. In sideways phases, price action often crisscrosses the moving average, and hence a close above 20-day average itself shall not be significant. At this juncture, 14,900 looks to be significant resistance in the near term. If the index closes above it, then it can induce some strength in the index which can expand the upswing into 15,100 to 15,170 zones. In between, the Nifty needs to sustain above 14,690 as a breach on a closing basis can induce weakness in the near term. India VIX has been in a tight range at around 20 mark, down by 3.16%. On the options front, maximum put open interest was seen at 14,000 followed by 14,500 strike, while maximum call open interest was seen at 15,000 followed by 16,000 strike. Call writing was seen at 15,000, then 15,100 strike, while put writing was seen at 14,500, then 14,200 strike. The data indicates a wider trading range for the Nifty at 14,500 to 15,200. The Bank Nifty opened positive at 33,588 and moved in a range in the first half of the session, which was followed by a swift recovery in the latter part. It closed the session 554 points higher at 33,858, signaling the return of the bulls. Metal stocks outperformed other sectoral indices on reports of a possible price hike. PSU banks were also in focus as the government announced a capital infusion of rupees 14,500 crore in 4 PSBs. What experts suggest investors should do on Monday? The Nifty has been forming higher lows from the last 4 trading sessions and managed to cross a recent swing high, which bodes well for the bulls. The index settled the day with gains of around 170 points and formed a bullish candle with a long lower shadow indicating buying was seen on declines. The index has to hold above 14,800 to witness an up move towards 15,000 and 15,100 zone. While on the downside, support exists at 14,700 and 14,600. The market witnessed a positive trend. Recovery from the support level of 14,700 is a positive from a short-term perspective. If the index sustains above 14,700, which improves the odds of a fresh breakout above 14,900 to 15,300 levels. The momentum indicators like RSI and MACD support the upside move, indicating that a fresh breakout is highly likely. The Indian market is likely to take cues from global peers as stimulus package announced in the US led to a renewed buying interest in global markets. In the near term, positive bias is expected to continue. However, rising COVID cases in India would remain a key concern. As Q4 earnings season approaches, investors' focus will shift to earnings announcements and management commentary. The Nifty has formed a broader consolidation zone of 14,300 on the downside and 15,400 on the higher side. Very soon, market may see a fresh breakout above 14,900, which can be considered as an immediate small consolidation breakout, and then we may see the next leg of the rally towards 15,400 in the near term. Good support is still at 14,700. As stated by Goldstone experts, traders should trade extremely cautiously with strict stop losses and should follow support and resistance levels on strict basis. Follow support and resistance levels along with trading call as published on our Telegram channel. For regular updates, like, share and subscribe our YouTube and Telegram channel. Also be a part of our Facebook family. Also follow us on Twitter and Instagram. Views by Goldstone Finvest. Let's build fortune together.